Welcome back, everybody. I'm Jay Zen, and this is the intro to trading part 2, the chart. And let's dive right in. Alright, everybody, in my last video, we took a look at some strong reversal candlestick patterns. So we're going to take a quick review at some of those patterns that we looked at. And here's just a little bit of those candlestick patterns that I was just talking about. Here we have the bearish engulfing that we talked about. Got the bullish engulfing. We got those dojis, shooting stars. We got the hammers we were talking about. Of course, evening and the morning star. Learning these candlestick patterns are going to be important because they show some of the strongest price action movement. But these patterns are part of a bigger picture or trend in the market. On a higher scale, other patterns exist as well. And knowing this will help us understand the bigger picture and the overall movement of the market. And we're going to grind it out today and learn a couple of these popular continuation patterns, starting with the head and shoulders. So the head and shoulders usually comes off of an up move where it creates a high or a left shoulder and has a pullback that creates a neckline. Then it has a move up or a higher high, creating a head. Then it has a move downward, creating what ideally we would want as an equivalent move to the last low, not a lower low or a higher low. Then a move up, creating a lower high or a right shoulder. It's important to note that both the left and the right shoulder should not be higher than the head. If either of them go higher than the head, the pattern is considered invalid. But after the right shoulder, you usually have a move going down that then goes near the neckline, continues on down, breaking through, confirming the head and shoulders pattern, where we will then take it down, continuing. All right, let's take a look at how this would look on an actual chart, because these things are usually not as perfect as we would like them to be. Okay, and so it's going to take some practice and some back testing to really refine your skills and being able to spot these things. Okay, so here we have a head and shoulders, and see it starts here. Choose the color. It starts here, making an off of an up move, creating the left shoulder. Then we have a move downward, starting to create the neckline. Then we have a move upward, creating a head. Then we have another move upward, creating a lower high, because it is not higher than the head. We would then wait till it then comes down to the neckline again, breaking through, confirming the head and shoulders pattern, where we would then take it. And so here's a little look at how that move would typically play out. You would have that up move in that left shoulder, then you have that head, then you have the right shoulder. We would then wait for the breakout of the neckline around there, and then we would capitalize on the breakout downward. And we can also wait for a safer retest trade back up, and knowing that it's also going to continue on downward again. And that's how typically the head and shoulders would play out. And so it's all about practice, practice, practice. The more we train on these, the more we can notice these moves. Okay, so here we have, coming off of the up move, of course, we have a left shoulder. We have the formation of a head. Then we have a right shoulder, where we would then wait for the what. All right, well, if you said the breakout of the neckline, you were 100% correct, okay? So in this move, we can see what happened here. We had the up move. We had the left shoulder, creation of the neckline. The head, the right shoulder, not higher than the head. Back down to the neckline, where we then waited for the breakout of it. And we had yet another retest of it, again for a continuation on down. That's another look at what typically the head and shoulders would do. And so if you guys see here, both of those moves happen back to back. Right? That just shows the power of these patterns for a total of over 600 pips. Like on average, the scalp trader is going to take from like 15, 50 pips, plus depending on your trading style. But looking at this, you can easily see how we can make our money in these movements. And we won't spend too much time on this one, but it's the inverse head and shoulders, which is basically the head and shoulders, except it's upside down. And the same rules apply to the inverse version as the regular version, except it will be coming off of a downtrend this time. Here's your first shoulder, creating the neckline. You have the head and the neckline, shoulder, down to the neckline, where we would take the breakout moving upwards. So again, on these charts, these things are not going to look as black and white as they do as those lines. And so we got to make sure that we're practicing and training ourselves to notice these patterns. So here we'll have an inverse head and shoulders off the down move, the left shoulder, the head, the right shoulder. You can see the neckline here is not perfect. And this is what I mean by these things are not going to be exact when you're trading. And so we have to make sure that we're capitalizing and making sure we know which one is which. And now let's keep grinding with another popular chart pattern. It's going to be the bullish flag pattern. Normally the bullish flag is going to be coming off of an uptrend, where it then hits a level and starts to consolidate inside of a zone. Eventually, it then breaks out of the zone, continuing on its original pattern. On the opposite end of that one, we have the bearish flag, which is going to normally be coming off of the downtrend, then hitting that level, consolidating inside of a zone, before it then continues on its original direction. Now let's take a look at how that would look on an actual chart here. Okay, so if you see, we have the up move, it's a level, then begins to consolidate inside of this zone here. Where we would then anticipate it to go back up to this top level, continue to break on its original direction. As you can see in this example, it did exactly that. We had the consolidation area where it then bounced up to this top zone, broke out of the flag, retested, then continued on. We'll also take a deeper look at the bearish flag pattern. As you can see here, we have the downward move, where it then begins to consolidate inside of this zone. We would then expect it to break out of the zone, continuing on its original pattern. And so here's how the result of that would look typically. You do have the down move, you have the consolidation, but then breaks out of the flag, continuing on its original direction. Oh yeah, the grind don't stop. Let's take a quick look at the bullish pennant and the bearish pennant flag patterns. They're similar to the other flag patterns, except they have a more triangular look to them. And in the consolidation, it squeezes more towards the upside or downside depending on the flag itself before it breaks out in its original direction. We'll just take a quick closer look at what those would look like on a chart. As you can guys see, we have the downward move. We have the consolidation getting tighter towards the downside before it then has no more room, breaks out, and continues on its downtrend. The same can be said for the upside, where it has your up move, begins to consolidate tighter towards the upside, where it then loses space until it breaks out, continuing back on its original trend. Alright, you guys, we're pretty much at the end here, but as a thank you, I wanted to drop this little bonus gem and give you guys a little sneak peek as to what we're going to be getting into when we get into more advanced stuff. Alright, so say for instance, we have a down move, we have a pullback forming a bearish flag, which then breaks out to the downside. After the breakout, we normally get the retest of the same area. Retest will get a pullback and the formation of a bullish flag, which will then break out towards the upside. And if you guys can see, when these things are combined, when these patterns work in harmony, they can actually form bigger patterns. Because here we have the left shoulder the head, the right shoulder, then the continuation, the neckline. And well, if that got you excited and you want to know more, let me tell you guys what to do next. I'm going to be doing a live Zoom chat. It's going to be called Live with Zen. It's going to be a first look at my support and resistance class. It's going to be pretty much for those who want a sneak peek into that. It's also going to be a chance for you guys to ask me questions directly. And it's going to be a good chance for you guys to, ask me the things that you want to ask. So when is it? As of now, I'm going to be doing it Wednesday, February 3rd, 2021 at 7 p.m. Eastern Time, and I'll be doing it by invite request only. So you guys are going to have to let me know if you guys are interested so that I can send you guys the email when it is time. Alright, so if you guys are interested in the class and if you guys just generally enjoyed the video, you found some benefit from it, and you feel like you've gained something from it, just smash that like button, smash that follow button, leave a comment, follow me on Instagram at Trade with Zen. You can follow me on Facebook at Zen Trading. You can look me up on YouTube at Trade with Zen. And for business inquiries and for the invite to the Zoom, you can contact me on my email, which is Zen Trading Group 2021 at gmail.com. All right, you guys, thanks again. And I'm Jay Zen. Peace.